Good afternoon, everyone. Myself, CA Raj Chawla, Vice Chairman, MSME and Startup Committee of ICI.
Recording in progress.
First of all, I welcome my Chairman, CA Dheeraj Khandelwal ji, Chairman, MSME and Startup Committee. Welcome, Dheeraj sir. I also welcome CA Neeraj Arora ji, our guest speaker for today seminar on understanding benefit funding and taxation of startup. I also welcome CA Manoj Lamba ji, expert in MSME and startup, and today's coordinator of the program. So, friends, I also welcome all of you. As we all know, DPIIT recognized Startup India offers numerous benefit to the entity recognized as startup. This benefit extend to the entity for 10 years, which is not limited to taxation aspect only, but it also provides benefits like mentorship, funding, and incubation facilities. Most of the startup entities have availed these benefits, which resulted into India as third largest startup hub. To develop on this topic, we who will guide you about all the benefit, including pitch presentation and process of recognition to avail the benefit under Section 80. I Chairman CA Dheeraj Khandelwal ji to please give welcome address and about this webinar. Dheeraj Khandelwal sir.
So thank you, Raji. I think this is an important topic for all the startups. And as rightly mentioned by the Raji, that in India, we are the third large in the world. We are the third largest ecosystem of the startup, and we are increasing very rapidly. And soonly, within a 5 years down the line, we're going to the largest ecosystem in the world, first largest ecosystem. And now it's very important to us to work in this area, and ICI also started activities on the startup, and we have a separate committee called MSME in the startup. It is not only for MSME and the startup also. In ICI we started the startup journey in 2018, and then we have a separate committee like this committee from last 4 years. This is the fourth year of this particular committee. We have the incubation centers across India. Now we have the 10. We're going to operate more startup incubation center across India. And we are planning to have at least 25 incubation center this year itself. And we're going to connect with the various ACITs and as well as the various universities, this incubation center, so that, our members can take the benefit, or the students can take the benefit of the seed funding. We are connected with the Ministry of Commerce, METI, and Education Ministry in the startup ecosystem. And we organized a number of webinars from last 2-3 years, and we are representing the case to the Ministry of Commerce of any issues related to the startup. We know that there are the issues of getting the taxable eligibility for the startup is getting difficulties. There are a lot of cases pending before the Ministry of Commerce, and the Ministry of Commerce has formulated a group for ease of doing getting the benefit of the startup to be benefited under this ITI. So these are the updates are there, and the institute is keep constantly working on it. And we know that hardly startup got the tax exemptions, and we are working on it. We are telling the ministries, when we getting the startup registration to more than 1 lakh the startup, why not it is tax exemption to the entire 1 lakh? Why only the few entities, few thousand people got the availing this tax benefits? That is the main aspects, I think, burning issues which we represent to the Ministry of Commerce. And promoting the ecosystem, we have our digital platform called startup.ici.org, where you can register as a mentors, where you can register as a investor, where you can register as a angel investors, where you can register as a service provider also. Even if you are a practicing chartered accountant and looking that you should provide service to the various startup in terms of funding, in terms of go to the market study in terms of the presentations, everything. You can definitely offer your services to the startup. Now we are connecting this our digital ecosystem to the Ministry of Commerce site, so that where the people going to register in our site, that will also be reflected into the Ministry of Commerce site. So that is the work is going on, and I hope that within June month itself it will be complete. Another major announcement is that we are starting our flagship event, startup uh, Sphere, which held last year in June itself in Mumbai Geo World Center. Now it's going to be happen in Bangalore, uh, that city. So I think most of the people are very excited to know about the the what are the startup is going to be again in this particular in Bangalore. So I think that is an exciting one. I promise each and everyone it's going to be again a great event under the this committee. I request everyone to register yourself into the startup sphere. We already open up the link and take the benefit of the early birds. So 5,000 rupees early birds, the fees is there, otherwise going to increase to 10,000 to 15,000, whatever the may be. So this is the, I think, update from my side. And if anything shall be there, please, you can freely interact with us. And if you want anything else for the promotion of the startup or anything to be represented to the ministry, definitely you can raise the concern and we can note it down and we can take it this to the ministry itself. So with this, thank you very much. I think it's a time again and again to interact each and everyone to understand the various issue. And there are a lot of youngsters out there who they are not aware of that how to avail these tax benefits which is available to the startup. So I think this is the pertinent, and Neeraj Agroraji is the expert, and he will justify particular this topic to all of you. And Manoj Jalamaji is here, so he will brief you in the entire conversation, and also your question going to take up by him to the Neeraj Vora. So ask as many questions which you can ask. I can promise you he will deliver all the questions of your to the Manoj Vora. And is if anything pertinent to us, definitely he can refer to us because he is very connected to us. So with this, thank you everyone. So let's now move rolling to the Manoj Lamaji to take it further proceeding. With this, thank you everyone.
Good afternoon, everyone. First of all, I congratulate CA Dheeraj Khandelwal ji, Chairman of this MSME and Startup Committee of ICI, and also my big brother CA Dr. Raj Chawla ji, who are the Vice Chairman of this committee. I take this opportunity to introduce speakers for the today's session, Mr. Neeraj Kumar Arora ji. Mr. CA Neeraj Kumar Arora ji is a practicing chartered accountant and regularly appears in various news channels for discussion on finance bill of Government of India and to forecast impact on Indian economy by analysis of changes in policies and laws, etc. He has extensive experience in arranging long-term funds and working capital loans for projects. Mr. Arora is a fellow member of Institute of Chartered Accountants of India, having more than 15-year experience in the field of big amount of project financing, loan appraisal from various banks and financial institutions. He has vast experience in working capital financing, term loans, various fund-based and non-funds-based financial facilities for MSME and startup. He is also having vast exposure of private equity funding from domestic and international funds and high net worth individuals. He has also good experience of financial advisory services, restructuring, business advisory services. He is also expert in forensic accounting and fraud detection. He has also done the special audit in various big companies through empanelment by income tax department. He is also on the panel of various state government to investigate the serious fraud matters. With this word, I introduce CA Neeraj Kumar Arora ji to the August gathering for today's session. Neeraj ji, please.
Thank you, sir. Thank you, Dheeraj sir. Thank you, Raj sir. Thank you, Manoj sir, for giving me this opportunity to present my views, my details, detailed views on the startup and funding aspect and taxation aspect and other benefit aspects. So I would like to thank everyone who is in this webinar for giving me this opportunity. So I would like to start with my presentation with the word file. Dheeraj, if you can please start my word file.
Office, please start PPT of Neeraj Arora ji. Yeah, please continue, Neeraj ji.
There is a word file. I would like to request, please start with the word file.
Yeah, it is started.
But
it is visible to us. What is Startup India's Seed Fund Scheme Initiative?
no. It's a PPT, sir.
Sir, I am
Okay.
sharing a word file right now.
Word
I'm sharing
file.
just now, sir.
Office, start the word file.
Yes, sir, doing just. Just give me 1 minute.
Neeraj ji, is this fine?
Yes,
Notification
it's fine.
get it.
Yes,
Yeah,
yes.
please start.
So we will start with the notification of Government of India dated 19th Feb 2019. It's a master notification which came later on. First notification came in the year 2016 in the month of January. Later on, many notifications come. Thereafter, government feels that there is a need for the master notification. So after coming this notification, all the clarifications, all the explanations were explained by the government in this notification. So I have I have briefed this notification into 10 parts. There are 10 paras in that notification. First para relates to definitions, which says what is startup, what is act, what is the board. So we would like to start with the definitions. Dhirji, how I can control this? Hello?
Sir, you can share this word file at your level also.
I am not able to control this file.
Okay, let me see the technical team. He will guide you how you can share. Meanwhile, we have shared this word file. You can go through it. We are taking help of our technical team. He will guide you.
I am not
Can you
able to
please guide?
control this file. Yes, I cannot scroll this file. restart. I need to. So I am not able to even close this file. No. Yes, please. Okay. Fine. Yes. Now it's scrollable. So there are 10 paras in the notifications. I have summarized each and every paras for your convenience. First para relates to the definitions. First definition is what is startup. We need to understand what is startup. There is a definition of the startup in the notification, which says up to a period of 10 years from the date of incorporation, if it is a company registered within a 10 years, it will be called as a startup. Second requirement for the startup is the turnover of the entity of a financial year since its incorporation registration has not exceeded the 100 crore rupees. Third requirement is that the entity must be working towards innovation, development, or improvement of products or services, or if it is a scalable business model with a high potential of employment and generation or wealth creation. So another condition is there. This entity should not be formed by splitting up or reconstruction of existing business and shall not, if it is formed by splitting up or reconstruction, it shall not be considered as a startup. Further thing is that the startup cease to be exist if it reach the turnover of 100 crore rupees or more, or more after more than 10 years, it will be ceased to be a startup. So we will have to analyze all these definition of the startup. First thing is that which can be startup? Only private limited company, a limited and partnership firm, and LLP can be a startup. But there is a difference when we go to the section 80 IAC. Section 80 IAC says only private limited company or LLP can be a startup. So there is a difference between the DPIIT's notification and 80 IAC sections. 80 IAC section does not recognize partnership firm as a startup. So we need to understand which type of entity we should form. We should form a private limited company or a LLP to get the benefit of 80 IAC. Otherwise, we will not get the benefit of 80 IAC. First thing is that. Another thing is that entity should be working towards innovation, development, improvement of product, process, or services. We should stop here, and again, we should analyze it. The entity should be working towards innovation, development, improvement of 3 items: products, process, or services. If there is any innovation, if there is any development or improvement in the process, product, or services, it will be called as startup. Or there is another thing, if it is a scalable business with a high potential employment generation, then it can also be called as startup. For getting the certification of the startup, we need to apply to the DPIIT. Another thing we should keep in mind, the age of the company, the date of incorporation should not exceed 10 years. When you will go to the 80 IAC, it says incorporation of the company should be done after 1st April 2016. So if any company is registered after 1st April 2016, it will be called as startup, subject to the other condition is fulfilled. Further, there is a definition of act Act means Income Tax Act. Board means Inter-Ministerial Board of the Certification, comprising of the following members. There are 3 members in the board, which is called Inter-Ministerial Board, who gives the certification of Section 80 IAC. The board includes Joint Secretary of the DPIIT, representative of Department of Biotechnology, representative of Department of Science and Technology. CBDT means Central Board of Direct Taxes. Limited liability partnership shall have same meaning as it is assigned in the section 2(1) of the LLP Act 2008. Partnership firm means a firm registered under section 59 of the Partnership Act 1932. Private limited company, we all know which is private limited company as per section 268 of Companies Act 2013. Turnover shall have the same meaning as assigned to clause 91(2) of the Companies Act 2013. All reference to the forms in this notification shall be construed as reference to the forms set out in the appendix hereto. DPIIT means Department for the Promotion of Industry and Internal Trade. So these are the definitions which are given in the notification dated 19th February 2019. It is a master notification. We have to keep all the things while formatting a new entity, that it should be a LLP or private limited company. Any other entity will not get a status of startup. Further thing is, next para is regarding recognition. The process of recognition of the eligible entity as a startup shall be as under. A startup shall have to make an online application on mobile app or portal set up by DPIIT. A user can go to the startupindia.gov.in and a new website has been launched by the Government of India, nsws@gov.in. It's not @.gov.in, which is National Single Window System for the Business Approval. This window has been recently launched by the Government of India. This application shall be accompanied by a copy of the certificate of incorporation. These further now we will deal in the documents which need to be accompanied with the application. First thing is that a copy of the certificate of incorporation or registration, a write-up about the nature of business, highlighting how it is working towards the innovation, development, improvement of products, services, or its scalability in the terms of employment generation or wealth creation. The DPIIT may, after calling for such document or information, may make such inquiries as it may deem fit, recognize the eligible entity as a startup, or reject the application by providing reasons. So when we file the documents to the DPIIT's officials will detail analysis all the documents attached with the applications and the write-up about the eligible startup. They will analyze all the things and they will ask the further questions. If they think it is fine, then they will give you eligible entity as a startup. Otherwise, they can reject the application by giving the reasons. Next thing is that certification for the purpose of Section 80 IAC of the Act. If we get the eligible entity as a startup recognition, thereafter we can apply for the certification of 80 IAC. What is 80 IAC? 80 IAC gives the exemption for the 3 consecutive years for the tax benefit. There will be no tax for the 3 consecutive years out of 10 years. It means startup there will be no tax for the startup, subject to the condition that turnover should not exceed 100 crore during that period. If turnover exceeds the 100 crores, it will lose the status of a startup. So what it says, a startup being a private limited or limited liability partnership. Here partnership firm is not covered. We need to understand this. Partnership firm cannot apply for the 80 IAC, which fulfills the conditions specified in subsection 1, subclause 2 of the explanation to section 80 IAC of the Act. May, for the obtaining a certificate for the purpose of section 80 IAC Act, make an application in the form 1. Applicant needs to file form 1 to get the certification under section 80 IAC of the Act. and that Form 1 along with the documents will be filed to interministerial board, and the board may, after calling such documents or information, making such inquiries as it may deem fit, grant the certification referred to in section 80 IAC and reject the application. When we file the application to the interministerial board, there are a lot of documents and informations which need to file with the Form 1. We will discuss with the same. Further, next thing is exemption for the purpose of clause section 56 to clause 7b. What it says, a startup shall be eligible for the notification dated 24th May 2023 under clause 2nd of the proviso to clause 7b of the section 2 of section 56 of the Act. Consequent exemption from the provisions of that clause if it fulfills the following three conditions. What it means? It means that a startup will get the exemption from the provisions of section 56 to 7b if it fulfills the following three conditions. What is that? First condition is that it has been recognized by DPIIT under para 23A, as we have read above, or as per any earlier notification on the subject. Because I already said there was earlier notification in this for the startup. Second condition is that aggregate amount of paid up share capital and the share premium of the startup after issue or proposed issue of the shares, if any, does not exceed 25 crore rupees. What it means, it says the paid up capital and the share, a startup cannot receive paid up capital and share premium more than 25 crore rupees if it want to get the exemptions of provisions of section 56 7b. Further, provided that in computing the aggregate amount of paid up capital, the amount of the paid up share capital and share premium of the 25 crore rupees in respect of the share issued to any of the following persons shall not be included. What it means, if we are going to count the amount of 25 crore rupees following amount received from the non-resident, a venture capital company or venture capital fund and specified company shall not be included in the limit of rupees 25 crore rupees. So we need to understand that when a startup is receiving the share capital money from any person, we need to understand if the startup is receiving from a non-resident venture capital company or a specified company, then limit of 25 crore rupees will not be hit. Further, provided that the consideration received by such startup for the share issued or proposed to be issued to a specified company shall also be exempt and shall not be included in the computing the aggregate amount of the paid up share capital and share premium of 25 crore rupees. What is the meaning of specified company? It means it should be a listed company having net worth more than 100 crore and it should have turnover more than 250 crore. Further, third condition is there. It has not invested in the following assets. What are those conditions? Condition number A is it should not have invested in the building or land appertaining thereto, being a residential house. First condition is that other than used by a startup for the purpose of renting, held by it as a stock in trade in the ordinary course of business. It means a startup cannot invest its money in the residential house other than the residential house which is used by it for the purpose of renting and held it as a stock in trade. Second condition is that land and building or both not being a residential house. Condition number A was related to the residential house and the condition number B is related to the non-residential house. Other than that occupied by a startup for its business or used by it for the purpose of renting or held it as a stock in trade. So what it means, condition number A and B, if a startup has invested in the residential house or non-residential house, it should be used as a held as a renting purpose, or it should be held as a stock and trade. If these two conditions are satisfied, then it can invest in the residential house and non-residential house. Further, a startup cannot loans and advance other than loans and advances extended in the ordinary course of business by a startup where the lending of money is substantial part of its business. Therefore, startup cannot invest in, cannot give the loans and advances to any other company, except in the business when it is the business of NBFC. Like, fourth condition is that capital contribution to any other entity. It cannot contribute to any other entity as a investor. Next condition is that it cannot invest in the shares and securities. Another condition is that it cannot invest in the motor vehicle, aircraft, yacht, or other mode of transport with actual cost of which exceed 10 lakh rupees, other than that held by startup for the purpose of playing, hiring, leasing, or stock in trade. Further, startup cannot invest in the jewelry other than that held by the startup as a stock in trade in the ordinary course of business. Further, the startup, any other assets means whether in the nature of capital assets or otherwise of the nature specified in subclause 6 to 9 of the clause D of explanation to clause 7 of subsection 2 of section 56. What are those assets? Those assets are archaeological collections, drawings, paintings, sculptures, any work of art, bullion. It means a startup cannot invest in all these assets mentioned in A, B, C, D, E, F, and G, and H. Further, these restrictions are for the 7 years. After 7 years, startup can invest in these assets. Provided the startup shall not invest in any of the assets specified in subclause A to H for the period of 7 years from the end of the latest financial year in which shares are issued at premium. So we need to understand what is startup. Startup, we have para number 1, and then process of filing with the DPIT is mentioned in para number 2, and later on the process of getting the exemption from the ATIAC is explained in para number 3. Further, the exemption from clause 6B of subsection 2 of section 56 are explained in para number 4. So these 4 paras are very important for a startup. Further, there is a definition of the specified company which we have already discussed. And what is the meaning of venture capital company? It is as mentioned in the explanation to clause 7B of subsection 2 of section 56 of the Act. Further, the notification dated 24th May 2013 has been issued to give the exemption to the person mentioned in para 4 above from the provision of section 56 to 7B of the Act. Government of India has issued a notification number 30 dated 24th May 2023 which deals with the para 4. Further, a declaration has to be filed by the applicant. A startup fulfilling the condition mentioned in the para 4.1, para 4.2 shall file duly signed declaration in form 2 to the DPIT that it fulfills the condition mentioned in para 4. On receipt of such declaration, the DPIT shall forward the same to the CBDT. Further, the notification referred in para 4, that is notification number 30 dated 24th May 2023 shall apply irrespective of the dates on which shares are issued by the startup from the date of its incorporation. So it means if a startup has already raised a share capital before this notification, because there was earlier a notification of the March 2019 which deals with the same para. Now this notification has been introduced by the Government of India related to para number 4 of the notification dated 19 February 2019. Except for the share issued for the share issued in respect of which an addition under section 56(2)(7)(b) of the Act has been made in an assessment order made under the Act before the date of issue of notification. Which notification? Notification dated March 2019. If there is any addition has been made by the Income Tax Department under section 56(2)(10)(b)(7)(b), that will not be covered with that notification. And notification referred to in para 4 shall be applicable only in respect of applicability of the provision of section 56(2)(7)(b) of the Act. Government wants to clear that notification which has been mentioned in para 4 only gives the exemption from the section 56(2)(7)(b. Not with the, there is no any other exemption is related with that notification. For any other exemption, we need to file separate application. Like for ATIAC, we need to file separate applications. Further, revocation. In the case, it is found that the certificate referred to in para 3 has been obtained on the basis of false information, then board reserves the right to revoke such certificate or approval. Where the certificate or approval has been revoked under subpara 1, such certificate or approval shall be deemed never to have been issued, granted by the board. What it means? It means that if any false information is given by the applicant during the time of filing the application, later on, if it is found that applicant had given false information, so then Government of India has the right to revoke the certificate which already given to the entity. In the case of startup which has furnished declaration in the form 2, invest in any of the assets specified in para 3, which we have already discussed in para 4.3. If any startup invest in the assets as mentioned in para 4.43 before the end of the 7 years from the end of the latest financial year in which the shares are issued at premium, the exemption provided under section 56(2)(7)(b) of the Act shall be revoked with retrospective effect. So it means there should be very clear that startup should not invest in any of the asset which is mentioned in para 4.3. Further, this notification shall come into the effect on the date of the publication in the official gazette. The Government of India will carry out a review of this notification on or before 31st March 2021. However, Government of India has issued further guidelines dated 21st June 2021. After issuing this notification, what happened that Government of India considered that there were a lot of questions was coming to the department for getting some explanation regarding some issues. Thereafter, Government of India issued further another notification dated 21st June 2021. There are some guidelines for the recognition of the startups. What are these? These guidelines are resultant entity and entities formed due to merger, demerger, acquisition, amalgamation, absorption will not be recognized as a startup. However, merger or amalgamation under section 233 of the Companies Act 2013 between any of the following class of the companies will not be allowed subject to the fulfillment of the norms of the DPIT notification by the resultant company. So it means if 2 or more startups merge together, if there is any amalgamation of the 2 startups, that will be allowed. 1 or more startup company with 1 or more small company is also allowed. It means merger and amalgamation of 1 startup company and 1 small company is allowed. Further, compromise and arrangement. Entities formed due to the compromise and arrangement as provided under Companies Act 2013 will not be recognized as startup. Conversion. If an entity is converted to another form, shall not be a bar for availing the recognition subject to the fulfillment of the condition provided in section 3 of section 80 IAC of the Income Tax Act. So it means if a LLP is converted into a private limited company, then it is allowed. And private limited is converted into LLP, it is allowed. If suppose LLP is converted into partnership firm, it will not be allowed. Further, fourth condition is that holding, including foreign subsidiary, joint ventures, entities incorporated outside territory, Indian territory, holding subsidiary company will not be permitted for the recognition. It means a startup company cannot be a holding company. Startup company cannot be a subsidiary of any other company. Both the condition we should take care of that. Any entity formed by joint venture will not be recognized. Any startup entering into a joint venture will be de-recognized. Entities incorporated outside India will be ineligible for the recognition. Most important thing is that a shareholding by Indian promoter in the startup should be at least 51% as per Companies Act. We should take care all of these 4 provisions while incorporating the new venture. Change in the name of the recognized startup necessities under the relevant provision of the applicable act will be permitted. The benefits will be applicable from the original date of incorporation, registration of commencement of business by the original entity, whichever is earlier. If there is what will be happen if there is a change in the CIN, LLP, IN changes necessity in the CIN, LLP, IN due to change in the domicile state, due to conversion as para 3 above, change in the industry sector subject to the cancellation of the existing certificate shall be permitted subject to the approval obtained as per the relevant act. The benefits will be applicable starting from the original dates. What it means, if a LLP is converted into a private limited company, then its SIN will be changed. Vice versa, if a private limited company is converted into a LLP, its SIN will be changed. That is allowed. Incorporating additional entities having similar address with the same production line, service, and at least one common director, designated partner will not be recognized as a startup. Common directorship and partnership. Recognition of an entity having common director and designated partner with any other entity shall be allowed to the extent permissible under the provision of the Companies Act 2013. Related party transaction shall be allowed, except it should be on the basis of arm's length basis. Regulatory area, entities operating in a domain specifically prohibited by law shall not be recognized. Sole proprietorship. A sole proprietorship is not eligible for to apply for a recognition. If a sole proprietorship changes its type of entity into a type permissible for the recognition, then recognition will be granted from the date of commencement of the business of the sole proprietorship. So it means if a person is carrying a business in the name of sole proprietorship, then it is not allowed to recognize as a startup. However, that proprietorship is allowed to convert itself in a LLP or private limited company, then it can be recognized as a startup. So these are further 10 conditions which need to be complied while forming the entity. Further, there are some capital gain exemptions are given to the startup. That exemption is section 54 GB exemption. What happened? Government of India has allowed earlier exemption under section 54 GB of the Act, where the capital gain arises from the transfer of a long-term capital assets being a residential property, a house or plot of land owned by eligible assessee. The assessee, before the due date of furnishing the return of income under subsection 1 of section 139, utilize the net consideration for the subscription in the equity share of an eligible company. What it means? It means if there is any capital gain from the house sold or land sold, if the owner of the land or house invested the net consideration into a new company, then it is allowed that exemption under section, no, sorry, exemption under section 54G be allowed. There is a time limit for the investment in the new company. The company has within 1 year from the date of its subscription in the equity share by the assessee utilize the amount of purchase for the new assets. We need to keep in mind one thing is that this deduction is available up to the assessment year 22-23 only. Further, there is a most important exemption under section 80 IAC. We had already discussed in para 3 regarding the exemption available under section 80 IAC. What it says, where the gross total income of an assessee being an eligible startup includes any profit and gains derived from the eligible business, there shall be, in accordance with and subject to the provisions of this section, be allowed in computing the total income of the assessee a deduction of an amount equal to 100% of the profit and gains derived from such business for the 3 consecutive assessment year. So, if there is any profit of the eligible startup, then it will be granted 100% deductions of the profit. But there are some conditions to give the deductions under section 80 IAC. These are first condition is that the entity should not be formed up by splitting up or reconstruction of a business already in existence, provided that this condition shall not apply in respect of a startup which is formed as a result of the re-establishment, reconstruction, or revival by the assessee of the business of any such undertaking as referred in section 33B in the circumstances and within the period specified in that section. Second condition is that it is not formed by the transfer of any new business of a machinery or plant previously used for any purpose. There is an explanation with that section. It says, for the purpose of this clause, any machinery or plant which was used outside India by a person other than the assessee shall not be regarded as a machinery or plant previously used for any purpose if all the following conditions are fulfilled. These conditions are, such machinery or plant was not at any time previous to the date of the installation by the assessee used in India. Such machinery or plant is imported into India. And third condition is that no deduction on account of a depreciation in respect of such machinery or plant has been allowed or allowable under the provision of this act in computing the total income of any person for the period prior to the date of the installation of the machinery or plant of the assessee. Second explanation is that where in the case of a startup, any machinery or plant or any part thereof previously used for any purpose is transferred to a new business, and the total value of machinery or plant or part so transferred does not exceed 20% of the total value of the machinery or plant used in the business, then for the purpose of clause 2nd of this subsection, the conditions specified therein shall be deemed to have been complied with. It means a startup can use the old machinery up to 20% of the total value of the machinery. Further, the provisions of subsection 5 and subsection 7 to 11 of 80 IAC shall apply to the startup. Further, what is the meaning of eligible business under section 80 IAC? 80 IAC says eligible business means a business carried out by eligible startup engaged in a innovation, development, improvement of products, process or services, or a scalable business model with a high potential of employment generation or wealth creation, which we had already discussed in the para 2 of the notification. Further, eligible startup business means a company or limited liability partnership engage in eligible business which fulfill the following condition. What are those conditions? First condition is that it is incorporated on or after the first day of April 2016, but before the first day of April 2025. Second condition is that total turnover of the business does not exceed 100 crore rupees in the previous year relevant to the assessment year for which the deduction under section 80IAC claim. It holds a certificate of eligible business from the Inter-Ministerial Board of the Certification as notified in the official gazette by the central government. And further, the limited liability partnership means partnership referred to in clause N of subsection 1 of section 2 of LLP Act 2008. So, when we apply for the section 80 IAC, we need to file a pitch deck. So, while filing a pitch deck, there are some guidelines for filing a pitch deck. We should ensure that all these guidelines should be followed properly. The guidelines are information about the product services offering of your startup. Another thing is that brief about how is your startup innovative and scalable. We will have to tell the department how our company is eligible for startup by giving the explanation that it is involved in innovation, scalable. Further, the details of the director details and their education, qualification, professional experience, and the formal role in the startup, current designation, if any. Further, shareholding patterns as on the date of filing of this application. Directors and shareholders citizenship details we have to give. Team details we have to give. Current role, education, professional experience we have to give. Details about the adherence to the specific government approvals required by the startup, such as FSI registration guidelines set up by the Bureau of Indian Standards. Revenue models we have to give. Funding received from a private investor as or angel VC funds. If we have received any funding from any angel investor, then we will have to mention it in the application. If we have received any support from the monetary or non-monetary from the central or state government, we have to mention. Details of any public or service sector awards, if we have won, that we have to give. Number of people directly employed by the startup, we have to give. Number of customer clients, paying customers, users with a copy of at least one contract, work order, MOU, number Play Store, Apple Play Store downloaded in the case of mobile applications along with the screenshot of the application listing on these platforms. Link of your startup website. You have to give our website link, screenshot images of your product website. And most important thing is that our pitch deck should be uploaded in the PDF format. So all these guidelines we should keep in mind while applying for the deduction under section 80 IAC. These are the provisions of section 80 IA which are applicable on section 80 IAC. Provisions of subsection 5, subsection 7, subsection 8, 9, 10, and 11 are also applicable on startup. So these are the provisions of 80 IAC which are applicable on the startups. Further, now we will deal since section 56 to 7B, 56 to 10, section 79, section 17 to section 192, section 115 JA, section 115 JBB. So section 56 to 7B deals. We have already discussed in para 4 of the notification dated 19 February 2019. Now we will discuss the provision. We will discuss the provision of section 56 to 7B. What it says, where a company not being a company in which the public are substantially interested receive in any previous year from any person being a resident any consideration for the issue of shares that exceeds the face value of such shares, the aggregate consideration received for such share as exceeds the fair market value shall be taxable as income, provided that this clause shall not apply where the consideration for the issue of share is received by a venture capital undertaking from a venture capital company or venture capital fund or specified fund, or by company from a class or classes of a person as may be notified by the central government in this above. So for the purpose of this proviso, clause second, there is a notification dated 24th May 2023. Further, we will have to discuss with section 79, which relates to the carry forward and set off the losses in the case of certain companies. We know that if there is a change in the shareholding of the company, section 79 does not allow carry forward of losses and set off the losses in the next year. However, in the case of startup, there is another proviso has been inserted by the Government of India, which says even if said condition is not satisfied in the case of eligible startup as referred to in section 80 IAC, the loss incurred in any year prior to the previous year shall be allowed to the carry forward and set off against the income of the previous year if all the shareholders of such company who held shares carrying voting power on the last day of the year or years in which the loss was incurred continue to hold those shares on the last day of such previous year. Such loss has been incurred during the period of 7 years, beginning from the year in which such company is incorporated. So it means if we want to carry forward the losses, first thing condition is that the shareholders which were holding the shares on the year in which loss was incurred should also hold the same shareholding in the year of when it was set off during the year. The condition of holding the 51% shareholding is not applicable in that condition. Further, we need to understand section 17(2), which relates to the value of perquisites. So if a startup gives its shares to its employees, to its directors, which is called ESOPs and sweet equity shares. So section 17(2) deals with those specified securities and sweet equity shares. Section 17(2) subsection 6 deals with perquisites. It says the value of any specified security or sweet equity shares allotted or transferred directly or indirectly by the employer or a former employer free of cost at the concessional rate of assessee. If a employer giving the shares to the employee of the company, then value of those shares will be added in the value of the perquisites while calculating the income of that employees. For the purpose of this subclause, specified security means security as defined in clause H of section 2 of the Security Contract Regulation Act 1956. Sweet equity shares means equity shares issued by a company to its employees or directors at a discount for consideration other than cash, for providing know-how or making available right in the nature of intellectual property rights or value addition by whatever name called. The value of any specified securities or sweet equity shares shall be the value, fair market value of the specified securities or sweet equity shares as on the date of the transfer, as on the date of the option is exercised by the assessee, as reduced by the amount actually paid by or recovered from the assessee. It means if an entity is giving the ESOP to its employee, suppose the value of the specified securities as on that date is 100 rupees and company has given those shares at rupees 10 to the employees. So it means 90 rupees will be added as a perquisites value in the income of the employee. So how we will tax the ESOP in the case startup has issued its ESOP to the employees at the time of exercise. when ESOP are allotted by the company, ESOPs are taxable at the perquisites under Section 17(2) of the Income Tax Act in the hands of employees. The taxable amount of such perquisites would be fair market value of the shares computed in accordance with the Rule 3(8) of the Income Tax Act on the date of exercising such option, less the exercise price or amount paid by the employees for such ESOPs. How it will be taxed at the time of sale? At the time of sale of the ESOPs by the employees, the same would be subject to the capital gain taxes depending on the nature of the ESOP, listed or unlisted, as well as the period of holding for such shares, which shall be computed from the date of allotment of ESOP till the date of sale of shares by the employees. In the case of listed company, long-term capital gain arising from the shares held for more than 1 year and exceeding rupees 1 lakh would be subject to the tax at the rate 10%. Whereas the short-term capital gain would be subject to the tax at the rate 15% under Section 111A of the Act. In the case of unlisted shares, the long-term capital gain held for more than 24 months would be subject to the tax at the rate of 20% under Section 112 of the Act. Whereas short-term capital gain would be taxed as per the marginal slab rates applicable to the employees. So these are the income tax provision which are applicable on the startup. Further, there is Section 192 which deals with the tax deduction at source in the case of ESOPs given to the employees. What it says? It says, for the purpose of deducting or paying tax under subsection 1 or subsection 1A, as the case may be, a person being an eligible startup referred to in section 80IC responsible for paying any income to the assessee, being a perquisite of the nature specified in clause 7 of subsection 2 of section 17 in any previous year relevant to the assessment year beginning on or after the first day of April 2021 shall deduct or pay, as the case may be, tax on such income within 14 days. 14 days from after the expiry of 48 months from the end of the relevant assessment year or from the date of the sale of such specified securities or sweet equity shares by the assessee from the date of the assessee ceasing to be an employee of the company, whichever is earlier. So we need to understand the tedious part will be come into the picture when these three conditions will be satisfied. Not in the year when the option was exercised by the employee. And what will be the tax rate? On the basis of rate in force for the financial year in which the SAT specified security or sweet equity shares is allotted or transferred. So, further, there are some benefits available in the Companies Act 2013 which are available for the startup. What are those benefits? Number one, startup will no longer be required to include cash flow statements as a part of their financial statement because startups is also a small company. Therefore, startup will no longer be required to include cash flow statement in their financial statements. Assumption in accepting the deposits. Any amount of 25 lakh rupees or more received by a startup company by the way of convertible notes. A startup company can receive deposits in the form of convertible notes. If convertible notes, single amount of convertible notes is of rupees 25 lakh rupees or more. Further, there is a benefit for the startup for not holding the 4 meetings in a year. Startup will now be exempt from the holding quarterly board meetings every year. The MCA now allows startups to hold 2 board meetings in the calendar years. This is 1 in 6 months. The gap between the 2 consecutive board meetings must be at least 19 days. Issue of the sweet equity shares, as we have already discussed, a startup company may issue sweet equity shares not exceeding 50% of its paid up capital up to 5 years from the date of its incorporation. Up to 10 years from the date of incorporation, a startup can issue ESOPs. Further, the benefit of Section 56 to 7B is also available to a startup company. Further, there are some more benefits available to the startups. These are self-certifications allow the following benefits of the Startup India registration. Compliances with 6 labor law, 3 environmental law through an easy online process. No inspection under labor law requirements for recognized startup for a period of 5 years. Inspection under the labor law compliance only up to receiving written complaints against the DPIIT recognized startup. All the startups falling under the white category are practically non-polluting and availing the benefit of Startup India scheme are allowed to do self-certification for pollution-related compliances in the case of officer only conduct medical checks. There are some more benefits available for the startup. Startup India benefits in intellectual property rights. These are Startup India benefits for the trademark registration. Startup India will get the benefit a rebate of 50% fees while filing the trademark application. Startup India registration benefits in patent filing. When a registered startup applies for a patent, the applications are fast track for the examination, hence reducing the turnaround time. Apart from this, they also get an 80% rebate for filing a patent application. Tax exemption benefit under Section 80 we have already discussed. Angel tax exemption under Section 56 we have already discussed. So these are the benefits which are available to a startup till the date it is recognized as a startup. So now I would like to invite Geeta Gandhi ji from our team. He will show how to apply for the startup. धीरज जी प्लीज वो सेकंड जो है आपकी पीपीटी वो चला दीजिए. धीरज जी, कैन यू हियर मी?
Sir, are you able to share the presentation?
PPT number 1.
Okay, PPT number 1 I have to share, right?
Yes.
Okay.
Startup registration.
So right now I'm taking help of my technical team. So please be on wait for one minute, hardly.
Till the time our PPT is getting ready, we'll start it. Thank you, Neeraj ji. It was indeed a wonderful presentation. I guess Neeraj ji has touched each and every aspect related to startup, its funding, its taxation benefits. We need to go forward for the procedural PPT. process of registration has been changed. So now government is introduced a simplified model to go the application process through national single window system. So here we understand how to proceed for the registration. The process has been done very simplified. Now we need not to go to Startup India website. We have to directly create a login through our national single window system. Registration made online. We can type www.nsws.gov.in. After clicking on the window, you will find another drop-down window. This window will appear on the screen. And now on the right-hand side, you'll find two types of login. One is investor login, other one is ministry login. You have to click on the investor login first for the registration, and this screen will now appear, which you see on the screen. Now we have to create a login account. Need to click on the sign up. We need to feed the full name, our email ID, mobile number, and set up the password. When this password has been set, our account has been created. We need to click sign up now. Once the sign up process has been clicked, our account for startup has been created now. Thereafter, we have to move forward and set up our profile. We need to provide the entity detail. What is the constitution of the identity? Whether it is a private limited company or LLP or other constitution. You have to click and set up your profile. You need to fill the details. Firstly, your PAN number will be validated. You need to put your PAN number and get the details. It will automatically fetch all the details. Next slide, please. We need to put a permanent account number here and get the details. After clicking the next button, we'll get our PAN validation. Once the PAN validation would be done, we need to put our address. Our registered address would be here. We can put our company registered address or the working address for the private limited company or the LLP. Here on, when we put our postal address, our state, district, and then click on the next button. Thereafter, we'll add the authorized signatory detail. Authorized signatory detail would be one key person who's authorized by the board resolution of the company or the LLP to apply for the startup. The detail of one key person would be entered here: date of birth, designation, contact number, email ID, address, and everything. We have to save these details and we have to get the login ID and OTPs from this registration person. The key person's DSA is also required for the registration process. We have to move further for the registration process and register ourselves as a startup. Now, in the next button, we have to go to the center approval. After clicking, a drop-down window will be appearing that would show all approvals or PISO approvals. We need to click on all approvals. After clicking all approvals, we'll find 642 approvals provided by the central government. Out of those 642 approvals, we need to select registration as a startup. You'll see the screen as green, registration as a startup. Now you need to add this startup approval to your dashboard. We need to click on Add to Dashboard. When we click Add to Dashboard, the next window will appear that will show this marquee and horizontal screen that one approval is pending here. Registration as a startup would show here. After going, you'll find the login person name, the ministry, and the application status. In the right action corner, you will find Apply Now. We need to click here for Apply Now purpose and start filling our application. When we click on the application button, we need to set a profile in the startup. We need to fill the startup type, our logo, our mobile app, website detail, and the interest areas. Like we are looking for funding, we are looking for investor. This drop-down window can select multiple options for you as well. We need to put all details like the innovation, idea, or the process development for the startup and complete our application process. We can complete the application process in 2 or 3 steps. As soon as we get all the information and details, we can access our application thereafter also. If the registration process remain incompleted, with the same registration ID, we can click again and come back to the same application process. Now, when we click on the dashboard button, we need to click on the access application and start filling up the profile, our startup recognition, our process, our profile, our key person details, and the idea or the development we are working on, whether we are going for scaling up, employment generation, or some kind of process development. We need to complete all the details in the profile section itself. After completing the application, we need to submit few documents related like PAN card, our COI, our website detail, trademark registration, logo, or any mobile app or website link which is there with us. After completing the application, within 2 days, we will get if the application is complete in all respect, then we will get the certificate ready available for download in the first screen, in the dashboard button itself. You will find under the approvals, download now, wherein you have clicked the action button. So, proceeding further, in the approval corner on NSWS scheme, you will find your DPIIT certificate. So that is the complete process for recognition as a startup. Once the startup is recognized and you can get the certificate of startup registration, more than 80% benefits of startups would be applicable to you automatically. You need to apply and quote your DPIIT number, and this registration would be available for the next 10 years from the date of incorporation. So now there are a few questions for your understanding, like who can apply, what is the time period, whether we can save it or apply the further later. That has been explained later. You can have the presentation and get these details. We can make changes. We can take the certificate in the download corner. There is no fees for startup in the recognition for the recognition of startup. If the startup recognition or the application is rejected, that doesn't mean we cannot apply it further. We can apply it after 3 months from the date of communication again and complete what are the loopholes in the application and what need to be improved. So our startup application registration process is complete. Once we get the recognition certificate, we are all eligible for other benefits of ATIAC, and a separate process is there to file the application. Thank you. Now, I would like to invite Ankit for further deliberations on funding aspects of startup.
हेलो हेलो धीरज जी, आप एक बार पीपीटी लगा देंगे स्टार्टअप सीड फंड का।
Here it is.
Yes. Hello, good afternoon, everyone, and thank you, CA Neeraj Arora ji and Geeta ji for enlightening us what is startup, ATIC benefit, how to register the Startup India scheme. Now, and I would like to thank the MSME and Startup Committee of ICI for giving me opportunity to share my view on my startup funding scheme. Now, I would like to bring light on the startup funding. So what is Startup India's Seed Fund Scheme initiative? So Startup India Seed Fund Scheme initiative was launched by our Honorable Prime Minister Narendra Modi ji on January 21, 2021 in the line of the Atmanirbhar Bharat campaign, which is launched on the May 2020. So startup seed fund scheme was for only for this 4 years, which is began from the 2021 to 22. Now, what is seed fund? Seed fund is the initial stage where startup need to initiate investment so that they can continue their business. So startup seed fund scheme was fabricated into two types. One is grant, which is 20 lakhs, and other is 50 lakhs, which is debt or convertible debentures. So DPIT, which is Department for Promotion of Industry and Internet Trade, they have allocated 945 crores for the startups. A startup will get the seed fund through the incubators each. So 20 lakhs, 20 lakhs. So 20 in the 20 lakh grant, it is validation for the proof of concept, prototype development, and productile. So proof of concept basically a idea which startup have but do not have so much fund to establish their product. And next stage is prototype development. They also get 20 lakhs for prototype development and product trial also. For rest 50 lakhs, which is debt or convertible debt for the market entry and commercialization for scaling their business. So till now the 3600 it is expected that Startup India seed funds shall help the 3600 startups in the country from the incubator. So what is incubator? Incubator basically government has made organization which helps the startup in getting the funding or for their help they need in the idea development, or if the startup needs space to work for on their startup. So next slide. So what is the objective? So objective of the seed fund scheme is the Indian startup ecosystem was suffer from the capital inadequacy in the proof of concept or development stage. So the capital which required at this stage of present at the situation for startup with a good business idea. Due to lack of funding, so many startup failed at an early stage. So for helping the new generation and young entrepreneur, government has made this scheme for their to help them in the startups. So what is the eligibility criteria for the seed fund scheme? So next slide. So the eligibility criteria for seed fund scheme is that the startup should be DPIT recognized startup, and they should not be incorporated for 2 years of the prior application. If the startup is incorporated in 2018, they can get the startup seed fund scheme till 2020, not beyond the 2020. So the next is according to Company Act, the Indian promoter should have at least 51% shareholding at the time of the application. So according to the scheme guideline, a startup applicant may receive seed support once in the form of grant or debt or convertible debentures. If they receive fund from the central government or state government, they cannot get this seed fund scheme. They either get a central or they will get the help from the startup seed fund scheme. Innovation solution in the area should be prioritized by energy, mobility, defense, space, waste management, to food processing, agriculture, education, biotechnology, textile, oil and gas. Technology should be incorporated into the startup main offering, business plan, distribution strategy, approach to address the issue at the end. So these are the basic eligibility criteria for the seed fund scheme. So how to apply the seed fund scheme? So there is a different portal for the seed fund scheme, which is SISF, in which the applicant, in the first step, the applicant should first log in through their DPIT login ID. Then they have to start the filling the application form. In the first tab, the application should fill their basic information like about what name, mobile number, email ID. So next tab is will be autofill, and third tab will be the what is the problem startup is solving, and what is the uniqueness of the startup, and what is the market entry, and etc. Tab 4 will be the about the co-founder, their education, their profile, how many people are in their startup involved. Next is the incubator which they will be preferred. How many they can select only 3 incubator at one time during the application. Now, sir, next slide. So apart from the startup seed fund, government also allocated SIDBI fund of fund scheme, which is also launched in the 2016 January under the Startup India Action Plan only by our Honorable Prime Minister. In this, 10,000 crore has been approved by the SIDBI for the different AIF, which is Alternative Investment Funds, under the SEBI registered. FFS was established for the specific goal of fund investment in venture capital and alternative investment fund. This fund of fund scheme is basically for the startup. They will get it twice the as much as they receive from the fund of fund scheme. So next, which is the scheme is, so next slide, is the credit guarantee scheme for startup, which is CGSS, which is the loan scheme which Startup India give to the startup up to 10 CR. So the goal of the CGSS is to offer credit guarantee up to predetermined limit and against loans made by the member institute to qualified borrowers and namely startup recognized by the DPIT. So DPIT recognized startup will get the CGSS by scheduled commercial bank, non-banking financial companies, venture debt funds operating under the SEBI registered alternative investment fund. So the basic eligibility of the credit guarantee scheme for startup is that they should be first DPIT recognized startup. Second, they should have reaching the stable revenue stream for the last 12 months, which is audited monthly statement. And third is that they should not be defaulting with any lending or investing in institution and not being categorized as the non-performing asset under the RBI guidelines. Like scheduled commercial banks are like HDFC. They can get loan from there, or AIF. There is only one AIF till now, Revex. So next slide. So there is other central government grant scheme for startup also for different ministries, which is first is Nidhi SSS. Nidhi SSS is the Nidhi Seed Support System scheme, which is by the Ministry of Science and Technology. So its eligibility criteria is incubate should be registered company in the India and with a minimum of 3 months residency at this TBI, or incubate should be an Indian company, and it should not be a Indian subsidies, MNC or foreign companies. The shareholding of the Indian promoter should be the 51% at least. Here the startup will get the seed amount from 25 lakhs, which up to goes to 1 crore. It's upon the project they are doing. Uh, the low interest rate for only 2 to 3% case of debt financing for startups. Pan India program startup considering the virtual incubation. They can also get a virtual incubation, not only the physical incubation. If so next so next next startup scheme is the Prism promoting innovation in individual startup and MSME. In this Prism, it is organized. It is in the Ministry of Science and Technology, again in Department of Scientific and Industrial Research. So Prism eligibility criteria is any citizen should, including can in the first condition is the startup should be Indian citizen, including the student innovator can apply. Second, Prism innovator who have successfully demonstrated the proof of concept with the support of the government institution. If the startup should not be for the Prism, the startup should be at very early stage. Only they will get like student who have idea and they want to develop their prototype for, or they have to market their product, they can get the fund from the Prism. So there is three category, which is fabrication. Category 1, if the proof of concept of prototype which cost up to 5 lakh, they will get the minimum 2 lakhs funding on 90% of the total project. Category 2, for fabrication of working model, process know-how, testing and tail, with the project cost up to between 5 lakhs to 35, they will get maximum 20 lakhs or 90% of the total project cost. Enterprise, third phase is enterprise incubation with project cost 35 lakhs to 1 CR, they will get 50 lakhs grant or 50% of the total project, which is less. So, next slide. So next is small next scheme is Small Business Innovation and Research Initiative, which is under the Ministry of Science and Technology, under the Biotechnology Industry Research Assistant Council, which is also known as BIREC. So eligibility criteria, again, 51% of the minimum should be shares of the company should be Indian citizen holding Indian passport. Minimum half of the person who subscribed their name to the LLP document as a partner should be Indian citizen, and participating company should have adequate in-house facility to the address should address to the project implementation aspect. So the benefit the startup will get is up to 50 lakhs, 100% grant from the BIREC they will get. If they need more than 50 lakh, BIREC will grant would be 50 lakh plus 50 of the cost over the above. They will get these seed from the Small Business Innovation Research and Initiative, which is also the BIREC. So next scheme is the Nidhi Prayas scheme. Nidhi Prayas scheme, which is program is focused on the provide support and funding from idea to prototype to young and aspiring innovator. Innovator should be a prize grant primary to convert their idea into the prototype. The priority areas which Nidhi Prayas scheme is focusing is clean tech, healthcare, energy, water, internet on things, other technology areas. In case for the startup, the eligibility criteria should be the annual turnover not exceed to 25 lakhs for any financial year since its inception, and want to develop the prototype for a new product for which they may have not received similar kind of support. The startup and its operation should not be exceed 7 years from the date of the incorporation. The support structure and mechanism, which is The quantum of prototype is 10 lakhs, maximum 10 lakh, and each center would get the 10 innovator per year. So the startup will be get maximum 10 lakh grant from the Nidhi Prayas scheme for their idea to prototype development. So next scheme is the biotechnology ignition and grant scheme, which is big, which is also under the BIREC only. So under the Department of Technology and Government of India, DPT. So BIREC believes in the big innovation capital of the nation and would come from the novel ideas. BIREC's strategy is therefore to support the numerous exciting ideas which have unmet need for the funding and mentorship. The applicant must be either an incubator or a registered company with the functional R&D laboratory to be eligible for this grant. The eligibility criteria for the scheme is that the applicant should be an Indian citizen and has to be physically incubated in the incubator. No virtual incubation will be there. They must provide termination of full-time association of project, and applicant from non-profit research organization need to furnish the NOC. The promoter or share of any LLP is not eligible. So the funding grant from biotechnology ignition grant scheme is that they will get up to 50 lakh for the research project with the commercialization potential with duration up to 18 months for their project. So the next is the Technology Development Fund, TDF, which is under the Ministry of Defense, DRDO, which is launched last year only for the entrepreneur who is working in the defense or in the drone area who need funding for their startups. The private industry registered in India, especially MSME or startup, the industry must be public limited company or private limited company, partnership, LLP, one as per the one person company sole proprietorship as per the applicable Indian law. The industry should be would to be owned and controlled by Indian resident citizen with at least 51%. So the benefit that startup will get from the TDI is that financial support and expertise to upgrade the existing product or system they have developed. The project cost up to 50 crore will be considered for the funding which have. The funding may be up to 90% of the total project cost. If they have more project cost up to 50 crore will be considered. So, next, startup of funding is the grade, which is under the technical textile journal grant for research and entrepreneurship across aspiring innovator in technical textile, which is also called grade. So it is under the Ministry of Textile, under the research and development innovation component of NTTM, National Technical Textile Mission. The grade has been launched last year only for the startup which is in the textile industry. So they will support a young innovator and entrepreneur in the technical textile to translate their prototype to technologies and support their commercialization of technologies developed by innovator or startup in technical textile. So the financial support which startup will get from the scheme is that they will get up to 50 lakhs funding for their startup, which is granted aid, and the fund will be released as sanctioned by the competent authority. The indicative fund allocation of 2 milestones shall be released in 3 installments. They will get the funding in the 3 installments. So this is all the funding scheme where startup can get grant or debt for their startup. Thank you.
Thank you, Ankit. Thank you, Geeta ji. Now I would like to invite CA Manoj Lamba ji to have a question answer session.
Thank you, sir, for wonderful deliberations. A lot of question has been received from the viewers. And the first question from a viewer, whether a management consultancy company can be a startup?
Yes, management consultancy firm can be a startup if it is providing services like which is scalable, which give lot of wealth creation. It can be a startup.
The next question is, sir, company X was incorporated in 2017.
17.
The
Okay.
company was set up as wholly owned subsidiary of USA Incorporation.
Okay.
The 90% share was transferred from USA Incorporation to promoter A, who is India-born US citizen.
Okay.
But out of funds in NRO account,
Okay.
the entity is engaged in deep technology. Can this register as startup regulation now?
Manoj, there is a guidelines dated 21st June 2021, which says startup cannot be a holding company and startup cannot be a subsidiary company. So in this case, it will not be allowed to as a startup.
Or moreover, it is not an Indian company, it is a foreign company.
No, it's a foreign company. There is also condition that there should be at least 51% holding should be
with the Indian promoters.
Indian promoters. Yes.
Yeah. Again, I think same participant is asking, what is the definition of Indian promoter?
Definition of the Indian promoter is that that promoter should be a citizen of India. It could be a non-resident, but non-resident holding a non-resident can also be a promoter, subject to the condition that he is holding. There is a condition that no. It can hold more than 51%. Subject to that, he should be a citizen of India and at any time during the last when he was in India.
So generally, people ask from me, being a startup consultant, suppose a startup is registered by two promoters with a capital of 10 lakh rupees, say. Both are Indian promoters. It is an Indian company, no issue. Later on, some investment is coming from outside India, and it is taking like 80% of their equity.
Okay.
Now, what will be the position of the benefit of these all kind of subsidies or grants?
Again, there is a guidelines dated 21st June 2021, which says at least 51% holding should be with the Indian citizen.
At any point of time?
Yes, at any point of time. It cannot be less than 51%.
It is not at the time of registration. It is at any time in the period of 10 years.
Yes, any time during the period of 10 years.
Okay. The next question is, sir, is it necessary to increase share capital before approaching for funding for startup? Let us say DPIIT recognized startup having 1 lakh capital can how much fund, and what should be the treatment of excess amount received? Is it share premium, or how much section 56 subsection 2 clause 7b come into play?
There is a limit that a startup can receive share capital and the share premium amount of rupees 25 crore rupees. But there are 3 exclusions in that limit. The exclusion are first thing is that if a non-resident is giving share capital to the startup, it is excluded. A venture capital company, venture capital fund is giving to the share capital to the startup, it is excluded. Third is if the fund share capital is giving to a specified company, Specified company means which is a listed company, which is having turnover more than 250 crore and which has net worth more than 100 crore. So all, if these three criteria are met, 25 crore limit is excluded.
So here my question is, suppose a startup is incorporated with BPIT with a capital of rupees 1 lakh. Later on, it gets some funding from somewhere, say around 2 crore for 5% equity.
It is allowed
It is allowed?
because it is within the limit of 25 crore.
Okay. The premium amount will not be considered because
The
there is an angel tax
premium amount
exemption.
will also be considered.
And what will be the position if the existing promoter dilute their right to the extent of 5%? What is the position of capital gain?
There is no restriction on the dilution of the equity, subject to the condition that 51% holding should be with the Indian citizen.
No, my question is, suppose my 5,000 rupee share is sold for 1 crore 50 lakhs.
Okay.
What will be the position of capital gain in the hands of promoter, in the hands of founder?
Okay. You are asking about for the capital gain.
Yeah.
There will be capital gain. Section 56 7B is related to the taxation on the company. If the company issues its shares more than its fair market value, then section 56 7B comes into the play. But as far as capital gain is concerned, capital gain will attract.
Okay. The next question is, I think it is not a relevant question, but I am asking because it come from a viewer. How a proprietor can convert its startup into new company or LLP? Conversion is not allowed, sir.
No. First thing is that proprietorship cannot be a startup. Second thing is that proprietorship can be converted into a LLP or can be converted into a private limited company. Later on, it can be applied for the startup.
The next question is, sir, please elaborate ESOP transaction in case of startup. What point one need to keep in mind while drafting ESOP policy for the startup?
For ESOP, there is a maximum limit of 50%. A startup can maximum allot 50% of its share capital as ESOP. At the time of the transfer of exercising the option by the employee ESOP, it will be treated as a perquisite in the hands of employee under section 17(2) subclause 6. Later on, if that employees share sold that shares, then capital gain will attract.
Okay. Whether any kind of EPF and SIC benefit is available to startups?
No.
There is no such kind of benefit.
There is no benefit.
Very important question asked by some viewer. What is the importance of term sheet of shareholder agreement?
Sorry?
What is the importance of term sheet or shareholder agreement?
Term sheet and shareholder agreement. There is no importance. The condition is only that the 50% holding should be with the Indian citizen. Whatever their arrangements is different thing. At the time of issuing the shares to the private investor, there is no condition.
Neeraj, I think in my opinion, this viewer is asking for how important this shareholder agreement is from the point of view of exit or some new investor is coming into that startup. From that point of view, they are asking that question.
I'm telling from the perspective of section 56 7B.
You are telling from the perspective of section 56.
There is no conditions.
But he is asking the question from the perspective of exit or conversion or rearrangement like that.
Yeah, their arrangement for exit and entry is a different thing. They can make any kind of arrangement for getting the private equity. There is no restriction by the government.
The next question is, can you guide us on negotiation part of offering of shareholder? While negotiation, what point one should keep in mind?
While issuing the equity.
For selling of equity, for diluting of equity, what point we should keep in mind?
It depends on entity to entity. suppose if the valuation of the entity is future valuation of the entity is 1000 crore, and the person is offering suppose 10 crore, and he is asking for the 50%, that will you value it? No, it depends on person to person. How much the valuation is, how much the amount he is getting.
Here I want to add one thing here. People or young founders nowadays are selling their equity like a vegetables.
Yes.
You see on Shark Tank, they are
Yes.
coming and they are selling any amount of equity, 33%, 50%, 60%, they are ready to give. So my humble advice, being a startup consultant to these young entrepreneurs or startup founders, don't dilute their equity so fast.
Yes.
Just to get funds.
Just to get the funds.
First, create the value of the company.
Yes.
First, create your name and fame. First, create your brand. Only then go for dilution of equity.
Yes.
Don't be hurry to get equity.
Don't be
just
hurry
to get funding.
Yes. Absolutely right.
And the next question is, sir, this question I think not clear. It is asking something about data fund. How it helps in startup.
Data fund.
Daughter. Beti.
As a daughter.
Hmm.
Okay. So I could not understand the question. What is the question?
क्वेश्चन मेरे को भी क्लियर नहीं हुआ सर, क्या पूछना चाह रहे हैं? अगर है पार्टिसिपेंट यहाँ पे तो सर दोबारा लिखिए एक बार.
I would request to the participant, please send his question again.
Yeah.
With detail.
And this question is from Madam Geetika ma'am the. Who we apply for an application on Startup India website, and you said NSWS. Are they different or same? I think same.
They are both are same. Geeta ji will deliberate
So
on
the
it.
process has been changed now. Now you are, if you go to Startup India website, it will automatically redirect you to NSWS site. Yeah. And you have to create a login and start the application from there.
And the last question from sir, people approach us that just after startup registration, they will get the fund, which is not the fact. Can you guide what other benefit that tax a startup can get if not availed any funding or using own fund?
There are a lot of benefits, like there are six environmental compliances benefit, and there are ATISC benefit, and section 79 exemptions benefit, and ESOPs benefits. There are a lot of other benefits are available.
So the benefits are like they can use for fund of funds scheme, priority in government tender. They can get the angel tax exemption as well. They can get rid of the labor inspector Raj as well. Also get benefit of 50% trademark concession, 80% patent concession. Their ECB process is very simplified. They can get self-certification as well. So these are the automatic benefits which a startup get apart from funding.
Neeraj, I think I have taken all the questions from the viewer. In the last part or in concluding part of the session, I think I have to convey a vote of thanks to you. So in last, I convey my sincere thanks on the behalf of entire committee of MSME and startup of ICI to CA Neeraj Arora ji and his team for his wonderful deliberation. He has covered his topic of the day in 3 parts. First through a Word file and then through 2 PPT, and 3 people are involved in that. And thank you everyone, Neeraj especially and his team for his wonderful deliberations and sparing valuable time. Thank you everyone to the part of this webinar. Thank you team ICI. Thank you everyone. Thank you so much.
Thank you sir and his team, and Manoj sir for taking out your valuable time. It was really a wonderful session, and it was quite interactive as we can see the questions received from the participant. So thank you for your valuable time, sir. Thank you, Manoj sir. We look forward to see you for our upcoming webinar also on the on different topic of the startup.
Definitely, every time.
Thank you.
Thank you.